What's up, everybody? It's Omar. It's Saturday, October 14th, 3:08 p.m. 3:08 p.m. And it's been a long time since I made a video. I've been telling people I'm gonna make videos, and I haven't done them in a while. I just been very, very busy. But I said that I would make a video today, talk about the simplest pattern I think there is to trade right now in the market. It's something that you can always, you can adopt pretty much to any, sort of stock, high price stocks, low price stocks. And I know this is gonna sound stupid, and maybe you're aware of this already, but I just want to review it just so that people can understand the rationale, what people are doing when these plays are taking place, and how how you can make the trade. So just so you know, I have I have a YouTube channel for those who don't know, and I have a lot of content on there currently. My handle is watchotrade, and I started it because people were just asking me. I used to I used to make a lot of videos for the group Bullish Bears, and you can see if you go to their page, you can follow them, subscribe to them. Their most watched videos are all my videos. So if you come here and you're gonna see what I did was, if you go to, I don't know if I go to videos or playlists. Let's see. Yeah, just go to playlist, and on the playlist you'll see, like, I give you everything that I pretty much do. So my videos for each month, and these are like great videos because what I do is, as I build watch lists, I talk about my plays, where I would get in, where I would get out, why. So you got a lot of information. This section here, momentum. This whole section gives you, all. So if you watch these videos in order, there's like 10, 11. It tells you from like soup to nuts, like what trading is, what people look for to trade, how to build your scanners using Thinkorswim, how to look at charts, how to short, how to go long, all the different strategies like VWAP bounce for long, and all this shit that that people pay for. I give it to you for free. It's all free. People have been showing me some love, which is nice. So watch these videos. You have questions, ask me. I'm more than happy to answer, and it's actually good for me because it reinforces my learning and making sure that I'm on point and stuff like that. I do have a Twitter handle. If you go to here's me. Just sign up, watch old trade, and so I'll post my watch list there. Sometimes I'll ask a question. Sometimes I post my entries. Sometimes I'll post you'll see me post my losses too, my wins. So here's a day where I lost, and I was talking about I lost 271 this day, but I cut my losses quick. So, and I just used Thinkorswim. I had like the big boy Centerpoint account, but I only make most of my trades are from work. So it's very difficult for me to trade. So I've been struggling with my trading because of that. But yesterday I had a killer day. Because I got to trade from home. I worked from home, and it was fantastic. I made $2,000. And that easily, I could have made, like, honestly, like 10, 20 grand yesterday. I just didn't take a lot of size because I was a little uncomfortable with my internet. But let's talk about what I wanted to make a video about. So I have a manual that let me come out of this. Where is it? All right, here. Here's a manual I put together with all my patterns, like patterns going long and short. What I'm going to talk about today is dip buying. It's the best pattern you can trade, especially if you want to grow a small account. Your risk is very minimal. When the stock goes against you, your losses are very small because you have a clear entry. This is the play that you guys should all be focusing on if you don't feel comfortable shorting, if you have small accounts. You only want to make trades, and this is the problem with trading, and everyone, me included. What happens is when I overtrade, I tend to lose money, a lot of money. When I just make one or two trades, I tend to do better. And you should only be trading when the pattern presents itself, meaning the best traders are not trading every day. They're only trading when the opportunity presents itself. So if you don't see an opportunity, guess what? You don't trade. Just stay away from trading altogether. Now, the number one play right now in the market is low float runners. Okay, stocks that are low float. So you're gonna say, Wilma, what does low float mean? And let me add a column. So I'm gonna right click, hit customize. I'm gonna type shares, and I'm gonna add this, move this up right next to volume. Hit OK. So low float means the number of shares available to trade at any given time. Think of it this way: the lower the number, the faster the volatility. Meaning, think of it like, so the lower the amount of shares there are available to trade on the market is the equivalent to like having a faster sports car. So you're gonna say, well, what is considered low float? Anything normally 20 million shares or under available to trade on the market is considered low float. And that means that the volatility, meaning the price of the stock, is gonna go up and down faster. All right. Now, a lot of times when you have low float stocks, okay, they're very hard to short. They're hard to find shares, but people short them. These big, brokerages, with people with big accounts, they'll short them, right? Let's take, for example, let's take a stock like RGSC. And I'm just, I didn't plan this. I'm just spitballing right now. I'm gonna pull up a big chart, okay? Now, you could see previously RGSC is a former run. A few days ago, this thing went from 169 to 280. Okay. Now, what happens is, let's look at what happened Friday. So here's Friday. This is a 5-day 1-minute chart, by the way. So what happens? Friday, the market opens and the stock starts spiking, and you're like, oh shit, I missed my entry. Forget chasing it, guys. You don't want to chase the stock. You want to let the stock have its run up, because what happens is, this is what happens. The stock hits its peak at some point, right? It's going to top out. Okay. What happens is now it starts pulling back. Now what happens is this: short sellers start coming in, and they see these lower highs forming. And if you could short, this is a great entry to short, because you can risk off the higher day, and that's very simple. And you just hold and just let the stock go down. Now what's happening is, as the price of the stock starts going sideways and going down, more short sellers are driving the price of the stock down. And what does short selling mean? Short selling means that you're borrowing shares from your broker because you expect the price of the stock to go down. So you literally click the sell button, and that's how you borrow shares. And then to cover, you have to buy. You have to buy those shares back at a certain price. So if I borrowed shares at $2, right, and the stock goes down to $1, and now I'm literally ready to buy those shares, the broker owes me $1 because I borrowed at $2, but I'm literally buying them at $1. Now, if I borrowed at $2 and the stock went to $3, guess what? I owe the broker $1 for every share borrowed. So shorting can be unlimited. It's an unlimited loss. You have to be very careful with this. But what I'm trying to get at is this: every time a stock has a spike like this, a crazy spike, that's when you should be salivating to say, okay, you know what? All right, this stock had a spike. It went from 190, and this is probably not a best example because it didn't have this is not a massive spike, but just to show you, I'll show you some other charts. The stock gaps up, right? It gaps up to 223. Now, here is the short selling, and the sellers selling their stock, and short sellers driving the price down. What you want to look for is a clear support level to then, that's when you dip buy it. And what's great about dip buying is, now, as you're watching this, you're going to be looking at time and sales over here. You're going to be looking at level 2 here. And you're going to see that the sales prints are going in. You're going to be looking at the volume bars. You're going to be seeing that there's more selling than buying. And that's driving the price of the stock down. What you're trying to find is a clear support level, because nobody knows what the fuck a stock is going to do, right? Looking for a clear support level to actually say, okay, this is where short sellers are probably going to start taking the profit, and they hit the buy button, and that drives like a temporary spike up in price. That's what you want to short into. So if I'm watching this and I'm watching this pop up and going down, along the way I'm making trend lines. So you see I'm clicking this down, it keeps going down. Once a stock goes below VWAP, that's when you know that, you know what, if it dips below it, more than likely, and it pops above it quickly and dips below it, that stock is more than likely dead. Because when a stock is above VWAP, that's what this indicator is, it's bullish, and when it's below it, it's considered bearish. Look what happens, it consolidates some more. but you know, it's not popping up, right? You can see if I put another trend line here, it's in this channel. So what is that telling me? That people that shorted here still, they haven't had that big rush to cover, right? And you see that it's consolidating, 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 comes down, right? Finds its next support level here. $2 is a psychological resistance barrier, so it's holding here now, right? So you see that, you see how this is where you get great confirmations that the stock is about to go up. You see how it's forming these double bottoms, and it did it here too, right? These are so, but the key here is when you see the stock going up and down, you're starting to see the volume come in. And when you see that volume is starting to come in, right here is where you start seeing the volume come in, and this is where you go long. And it doesn't seem like much, but this went from 203 to 220, and that is where you would buy. Now, let's say you have a $10,000 account, $10,000, and you take 3,000 shares. Well, if you did 3,000 shares, let's say you got 15 cents on that, right? You just made $450. This is how people grow their accounts exponentially, you know. And Rose wasn't a great example because it didn't have a massive spike, but I just picked one. Let's look at Netty. I think Netty had a crazy spike yesterday, right? So here's Netty. Yes, so Netty had a crazy spike on some stupid press release, right? So if I go to, you should always have FinViz and Yahoo Finance up, and you know, Netty, if you see, I have, this is Netty here, and you're gonna see there was a press release here yesterday. Oops, and the press release talked about, I don't know, some bullshit, and that drove the price of the stock up. And let's get to what I really wanted to talk about, which is, okay, so you see Netty, and then you see people talking about it, and they're, let me go here, you see people talking about it, and they see this crazy spike, and you're like, fuck, I don't know when to get in, right? You don't want to chase. That's all right. Let Netty do its thing. Now, is Netty a low float runner? Let's see if it's low float. I'm not even sure. Netty is, yes, low floater, right? It's under 20 million shares, so you know it's going to be volatile, okay? And it has this massive spike, so you're like, I can't short it, my brokerage doesn't have shares, whatever, right? That's okay. You're gonna watch it. Now, this is where it requires so much discipline, because you gotta be patient enough to watch the stock for your entry. Some people don't have the patience to do this, you know, and this is where trading gets tough, you know. So when you see a stock gap up, you're gonna get a wash. What happens is it rips up here, finds its high, right? It gaps down, right? Here's it. So now this is the new support level. This is the new resistance level. Now, technically, right here, when it hit this candle and you see the volume come in, you could have took this long right here, because you get that bounce, you get that pullback, and then you get another bounce. Now, it doesn't seem like much, but this low here was 634. It got up to 708. So right in here, you could have took your trade and made your money. This is the easiest pattern to trade these days. Now, you're going to say, all right, well, you missed that. That's okay, because what did it do? It formed a lower high. So you know short sellers see that, and they're like, oh, okay, didn't break higher day. Let's short this shit and risk higher day. So those guys with those big accounts, they're going in heavy, 10,000 shares, 20,000 shares, 15,000 shares. You know, if it's shortable, if it has the shares available, and all you're doing is watching the stock, looking for it to find a clear support level so that you can then take it long. So where did that take place? Let's look at the stock. If you notice along the way, it bounces, right? So it has this big, you know, it has this gap up. It finds its high here, okay? I'm sorry, oops, so it sells off again, right? Finds its support here. And it doesn't seem like much, but it goes from 606 to 645, all right? So imagine you had 1,000 shares, you just made $400 if you took it from 610 to 640. Or I mean, that would be 30 cents, $300. Okay, but you gotta think, okay, this stock was at $7. It went from 4 to 7. That means there's a lot of people still holding shares to short. I haven't got that big spike in volume. And what's happening is short sellers are trying to see, is this going to continue to go down? And if you notice, it starts forming these lower highs, right? So this seems to be the resistance right here. I mean, new support, I'm sorry. So right here in this range, and look what happens. It has this another crazy spike from 582 to 635, comes back down, forms another. Now each one of these are opportunities for you to take an entry, but you still haven't seen the bigger gap up. And look, at all day it is in this range. So when you see a stock like this and a range like this, and it keeps bouncing and testing that support level, then you got to say to yourself, oh man, shorts are getting scared. They're going to cover because the stock clearly is not breaking below this. This happens around 12:30, but look what happens. They said, fuck it, let me cover. And look, you got that spike from 560. This is where you would, now what I'm doing is I'm looking to see it bounce off that, and then right off in that next candle, this is where I'm taking my entry, risking the low here. All right, so you put your stop a few cents below for the wash, and you're risking it off here. That's why dip buying is so much. It's the simplest pattern to trade because you have a clear stop. All right, and you take profit along. You don't never know how high it's gonna go, but you got to look at the next resistance level, the next trend line where supports becomes resistance becomes support, and then support becomes resistance as your exit. So if you're in here, you're looking to get out here at see if it's gonna hold, and you see, look, it tops here and then people short it again, but you see it can't break this. So that's when you know it's time to go long. And then right here's the confirmation because you got the higher low, and look, this thing squeezes all the way up to 660. That's what you're waiting for. You could have took entries here all day, but what you could have did was, I was trading other stocks. I wasn't looking at this, but man, I would have been scalping for huge wins all day on this because it kept giving you that. And then look, lower high, it never got back up here. So people who shorted here, I mean, they're like, fuck it, let me just take my profit. But some of them may still be holding over the weekend because look what happens. Comes back down, bounces up again. Now, it doesn't seem like much, but these low floaters have so much range in those few minutes that, you get huge momentum pushes. And that's how people make their trades. Now, I applied this strategy to HMNY. I made several trades on it yesterday. I banked really nice. Now, I hope this makes sense, and you can apply this to low float runners, but you can also apply this to just regular stocks too, like that are just this pattern. You always gonna get a bounce, whether it's a low floater or a stock that has 100 million shares, 100 million shares to trade or whatever. You're always gonna get the bounce. Look, let's look at LBIX. I didn't even look at LBIX at all, but let's look at a stock like LBIX. All right. Now I prefer to do it on a stock like Netty. Let me pull up Netty again. When you get that big gap up, because when you get that big gap up, you're gonna get that big gap down and then that big gap up again. It's like and all you gotta think about it like in a drawing. Let me go to paint. This is what happens. This is why and you're gonna say, well, Omar, that means don't trade unless I see this. Yup, that's what I'm telling you. You don't make any trades. That means if you gotta wait a week to make a trade, you wait a week to make a trade because you only want to trade when the pattern appears. So what I'm saying is, stock gaps up, right? Finds a high point, it's gonna pull back, right? People short it, and then you're gonna get another bounce. And usually it's a little lower than but you get another bounce, and then then it goes down, then it goes up and down and up and down. But then you find like a support, you're gonna see it do this, and then people are gonna go, oh shit, it's not going any lower, and then it goes right back up. And that's how you do it. This is your risk, and you just take it up. Or if you were lucky enough to catch it where it hits the top and it's coming back down, you're waiting for it to find a support level so that you can buy from here and take it up and take your profit along the way up. I know this is sound like you're like, Omar, is that simple? That's what yeah, it is. It's that simple. It's not rocket science. And the reason why you see guys like Tim Grattan, well, Tim Grattan doesn't do this much, but like Roland Wolf is the one that Tim Sykes is pimping right now, and some of these other traders. If you notice, they're not going for they're not getting like 50-cent wins, dollar wins. They're taking like 20-cent wins with 10,000 shares. And that's why they're making so much money. But they feel confident taking those trades because they find a clear support. And especially Roland Wolf, he does this all day, which I don't blame him. He's smart. You know, it's an easy play. You know, HMNY. What I did was let me pull it up. Oh, it's not here. This thing's tanking. So what I did with HMNY was very simple. I saw the stock gap up. I saw it pull back. When I saw it find its low, guess what I did? I saw that this is the top, right? It had its spike. Now it doesn't seem like much. It's finding its way, but right here, you know, it's like 18 bucks. Gets all the way up to 1966, and then short sellers come drive the stock down. So all I did was, get out of here. Ah, so annoying. So all I did was wait for it to find its bottom, because I know short sellers are driving the price of the stock. And you see, right? It stops here, it gaps up, and then it came back down again in the next 1 minute candle. Right here I got in. When I saw that it didn't break the low, that's like a double bottom, and my first trade on this, I just took it long. I got executed, I think it was, I got executed like a break over 1750, I think I took this. And once it broke over 1750, I took this up for a ride. And you know, it kept going up and back and down. So I so I got out. Actually, it wasn't this candle I got out. I took like 1,000 shares. Boom. That was, and I got out at 1750. I got out like at 1810. You know, that was my first trade. Then then I watched it. And I was gonna take, but the swings are so high. Like, this is such a volatile stock. It freaking freaks me out. So I watched it again. Came back down. Didn't get as low as this, but I said, okay, here's the new support level. And I'm seeing it tap, tap, tap. And when I see this doji, that usually means that a reverse is coming. I saw the volume coming in. And again, I took this long over the break of 18. 1,000 shares. And I sold, I actually held this. I was nervous because the swings were so crazy. I actually was greedy and I held this. And once it broke over 19 in this candle, I got out. So I made, I got in like I think it was like 1810, and I sold like 1905. I made like close to another $1,000. I made like 1,600 on those two trades. And then, you know, and then you know, I should have kept watching it, but I actually deviated I was like between this stock and I was between this and X. So X, I used this scanner, trade idea scanner, which was pretty awesome. And there was, I don't know, some news about steel, some contract. So I saw pre-market that this was the pre-market high. It was already gapping up, you know. And I said, if it can break over the high, pre-market high, which was, what was this, 2687, I thought it had a chance to go. So I saw it actually break above it here. And I saw the pullback. I saw it gap up, and then it pulled back, and it found its support here at 2965. Once I was watching this, and I was in HMNY. So what I said, if once I saw this happen, because right here, this is what I'm thinking, right? Stock is gapping up. It found a clear support level here, right? I mean, I'm sorry, resistance level here. Now shorters are driving the price down, and sellers. So once I saw that it got below 26.95 and it started gapping up on this candle, a break over 27, I took it long because shorters are covering. So I applied that same principle to, you know, that I'm talking about, looking for low float runners. Like, here's another low float runner, okay? Like a low floater that's up or down. You know, you're gonna say, okay, if this is tops, this is another stock, all right? It's the same thinking. All right, you see stock, either there's two ways you're gonna play this. Either you know a stock is coming down. You see it goes from 81, right, and it found its support level here. Once you see it finds a clear support level and it's not breaking below that and volume's coming in, that's just all that's telling you is that short sellers that were shorting the stock are covering, and you just take it long. you can apply that to a low float runner where the stock moves fast, or a stock like X, okay, that, you know, it's a, you know, stock has 174 million shares, but it's the same principle in theory. You know, you're just looking for, you know, you're saying, hey, short sellers are gonna see that this is the new resistance point or support point. Sorry about that, and it's above VWAP, so it's telling you it's bullish. And when it broke over 7, I just took this for a ride, and I saw it broke above. Actually held through all this, and I took 1,000 share position in it, and it went above 27.35, and then it kind of broke down. Right in here is where I covered. So I got in at 27.01. I got out at, I think it was 27.27 with, so I made like $270 on that trade. That's it, guys. The reason why I'm telling you though the low floaters are better is because you know, the range is so much bigger and it happens so much faster that you know, you can make a lot of money a lot quicker. So that's really what I'm talking about. Now the other way you can look at this is, and I have it in my manual, all right? So I was talking about looking for the spikes and waiting for the reversals. The other approach to buying dips is at the market open, you're looking at for stocks that are completely tanking, like completely selling off at the open. And let me go back here. So a stock like this, a panic. So meaning, here's an example, stock like Zeno in my manual where the stock just freaking tanks. You know, at some point it's gonna find a support level, volume's gonna come in, and you take your entry off that support level. Now, sometimes along the way, you're gonna say, well, Omar, it's easy to say, it's hindsight, and you know, sometimes that's true. Sometimes you're gonna make a trade, and you know, you're gonna say, you know, I don't know, you're gonna see here, and you're gonna think, now you gotta really be looking at the volume bars. Like, I wouldn't make this an entry, but let's say you make this your entry. Like, you see it went from here, and now it's starting to gap up, and you're like, all right, so I'm gonna make my trade, you know, risking this, and you know, it goes down. So you know what? That happens. Sometimes these stocks continue to go down. You know, that's why you really gotta really be careful and really see a trend reversal where the volume's really starting to come in. That's where you're gonna see. And you also want to look at what was previous support and resistance. So you're gonna be looking, you know, you're gonna be looking at a chart over the last several days to see where were the previous support and entry points, so that you can mark them if they're, you know, in that range. Here it's not. This is clearly above it. You would have to look at a longer time frame, like, I don't know, I'm looking here 180 days, you know, and you can get a better sense of where support and resistance is on the stock, so you can kind of get a sense of where you should be putting your lines. But that's what matters more than anything else, guys. You can make trades without any indicators. You literally look at the volume bar, support and resistance, and that's how you make your trades. Now, let me show you an example of what I talked about where, you know, we want to look at something that tanks. Okay, perfect example, Cassie. This is a perfect example. So you're gonna say, well, all right, I'm not gonna look for the spikers. I feel more comfortable looking for the stocks that are tanking. This is a perfect example. This is a stock that, you know, oops. Oh, what did I just do? I don't know what I just did. Let me just get out of there. All right, here's an example. So, all right, so here's an example. This is Friday. Market opens, right? Stock peaks here, right? So this is clearly resistance. Starts gapping down, right? So short sellers bring it down, right? People selling, so it finds a support level here. Now, theoretically, could you have taken this right here for when the volume came in, risking this? Yeah, and you know what? With 1,000 shares, let's say you got to execute it at 340. This hit a high of 350. So let's say, you know, 10 cents, $100, you know, but you know, you see it going sideways and you're not sure where it's going to go, boom. And right here would have been a beautiful short entry. But let's say you missed a short and you're not comfortable shorting it. You can't short it. There's no shares, whatever. You're saying, all right, this shit is tanking. So I know because of all this volume, at some point, this is going to find its support and short sellers are going to actually buy their shares back. All right, or actually buy the stock, and people and dip buyers are going to buy looking for that scalp. So when you see monster volume coming in like this, where it's just completely tanking, right? You know, you're gonna see that along the way it finds its, you know, some. This is here's a support level, but you can see that you're not good because the volume candles are red, the volume is still selling off, and here you got another tank, right? So you put another trend line here. Okay, now right here you got a little bit of reversal, but you don't got a lot of volume, so this for me wouldn't be where I would go. And you see right here, you're like, you're right, you put another trend line and you say, okay, it's below VWAP, may have some more to go, and you see that it consolidates and boom. Now right here is what, 275. So you put your trend line here, and now you're starting to see a trend reversal, and you're starting to see some volume come in. When you see that trend, this is where you take the trade. And look at this. If you would have got it, let's say at 277, risking 275, this thing got all the way up as high as 310. And this is how guys like Roland Wolf and some of the, some of the people that Tim Sykes pimps makes their money. They look for opportunities like this where there are clear support levels where they can dip buy in, and they go in full size because they know that this is gonna guarantee the pop. It's not, they're not looking to make $1. They're looking to make 20, 30, 40 cents, but they got 5,000 shares, 10,000 shares positions, which 20 cents on 10,000 shares is $2,000, and these what these guys do, and this is how you play it. This is the simplest strategy, guys. This is the way you should be making trades. So, you could take a both approach. You can look for a stock like this. Look, it's great because you get two perspectives with Cassie. This is the day where it just tanked, and then you got the pop, and then the continue to sell off. Or this happened, what day was this? This was on the 11th, where it had this crazy spike from 260 to 484. When you see this, right, you're like, all right, great. It found its high. People are going to drive the price of this stock down. Short sellers are going to come in. But at some point, they're going to cover. So I got to look for that opportunity to buy the dip once it finds clear support. What you do is you want to put trend lines down here, here, here. So I'm putting trend lines where support and resistance would have been along the way up to give me a better sense of where that reversal might be. And look, you see it just tanking. And right here you kind of see it tanking. You got this one candle, but that's not enough for me to make a trade. I need more volume. So but some people might have taken the trade right here, and and honestly, this thing hit a high of 395. So from the low of 376, you could have made 20 cents. It doesn't seem like much, but you could have, and the volume was there. It was 83,000 shares in that 1 minute. All right. But I would still be looking for a trend reversal to see where it's going to go. And right here, where I see this, where I see multiple candles holding this trend right here, I'm looking. And in that next candle, I see the stock starting to gap up. I'm probably making a trade like right in here, risking like the low of the 1 minute candle below it, or the low where the actual trend began to reverse. And it doesn't seem like much, but let's say you got in here 375. This thing got to a high of 388, And so that's what you're looking for. This thing continued to actually gap down, and and this wasn't a big wash. So for me, I would be looking to say, okay, this wasn't the big reversal because the short sellers are shorting these pops. Because look, you got that double top right there, and the stock continued to gap down off that double top, and then right here, look, it came down again, and then look, it held this again, and look, it went from 368 all the way to, oh no, this is the one I was looking at, I'm sorry. And then look, it goes down, gaps down, and it continues to gap down. And this is an example where sometimes, where you don't get that monster pop, but this thing continued to get down, and it found its clear support. Now, here, this was an opportunity to get in from. Now let's see what this was. This was again 362 to 388. But at some point, this stock is going to continue to gas out and go down and find a clear support level. And here, where the trend was, reversal was, and it was at 338. Okay, and short sellers covered here at 338. And if you would have gotten here, okay, where you see that reverse, where you see, okay, look, it gets to 363, forms a higher low, and that's when okay, all these guys who shorted up here are really going to cover, and then this thing goes all the way up to 380. All right, and it kind of continued to run all day, all the way to 3. What was the high here? 388. That is how you should be shorting. I don't know what I did here. That is how you should be shorting. Dip buying these accounts. All right. So that's what you want to do. You want to look for clear support levels to buy dips. Glue. Here's another example. Here's glue. Okay. And this is the last one. I know I made this video longer than I wanted to, but here's glue. Glue runs up at the market open, gets to a high of 451, right? And you see this going along the way. You're not sure if you want to chase, so you don't buy. So you're thinking, all right, I'm just gonna wait till it finds its high, has the reversal, and that first one is the one I like to buy into. Really, this is the one. So if you look at my manual, I like the ones that spike up, and then you always get that pullback, that first pullback, and then that second bounce. So you know that's why I like to watch them as they go up, because I'm looking for that first pullback. I'm looking for that first pullback, and then I'm buying right off that pullback. So you see, you get that pullback to what, 437, and you see, look at it. This is testing it. This is great. When you see this, you're like, all right, this is fantastic. If I see some volume come in, and I see it start to go up, I'm going in. And look, you know, right into here, you could have went in 440, risking that 438, and you got the pop. Came back down, rolled all the way back up to 450. Doesn't break 451. So you know what you do? You take that short, and you could have rolled this down, you know. But this is what I like to buy. It's safe. It's safe play. And you're like, well, Omar, you're making 10 cents, 20 cents, 30 cents. You're not making $1, 50 cents. You know, sometimes that happens. It depends. But you know what? A win's a win. You know, a win's a win. So, you know, me, I'm more of a short seller, but I've been doing a lot of this dip buying. Like, and look what happens here. The stock kind of, you know, forms lower highs along the way. So you know that, guess what? Shorters are coming in. They're going to drive the price of the stock down, but it's going to have another bounce. Look, it finds support right off VWAP. And if you see it can't break below VWAP, that means the stock is still bullish. And you're getting these pullbacks here, which are clear confirmations that this is a strong support level, and you take it long, risking this. And look what happened. The stock, you know, let's say you got in 433, you could have rolled this up to 443, and you know, kind of went sideways after that. But it doesn't seem like much. But hey, you know what? If you see these clear trends, you trade these trends, and that's how you know you're gonna make money. Okay, that's how you're gonna know you're gonna make money. Yeah. Do you want to capture it here before it moves? Here. What you're gonna need is a scanner to know what's in play, and then you're gonna have to confirm the news. So if you got, like, you know, a press release, a merger, good earnings, and before the market opens, and the stock has a history of spiking, then yeah, you can, you know, take it for a ride with some strong volume up. But you know, that doesn't happen. A lot of times what happens is people see and they hesitate thinking about it, and then they buy in here and then the stock goes against them. So what I'm saying is, let the run happen. Look for the pullback so that once it finds a support level, you can buy, risking off the support level, and you take it for a nice little ride. That's what I'm saying. So I hope that makes sense. I hope you found some value in this. You know, look at the charts yourself, guys. Study the charts. Go to FinViz. If you don't have a thing, go to FinViz. And I don't know what I did here. I made this. Okay. And look at the biggest percentage gainers. Look at the biggest percentage losers. Look at the charts and see what happened. Look at Mark. I'll pull up Mark. I don't know what happened with Mark. I didn't even look at Mark all day. I didn't look at it at all. All right, here's an example of Mark. Let's pull it up with no indicator so you can get a nice clear. All right, so Mark is moving crazy pre-market, right? You know it's gonna have, you know, at some point it's gonna spike and have a reversal. All right, so here you go. Here's the spike, right? And you know, in the first 1 minute candle, it's not sure what it's gonna do, and now it's starting to sell off. Okay, so let's see what happens. All right, it's starting to sell off. The problem is with some of these is that you gotta be patient enough to wait for your opportunity. But look, the stock bounces. It finds a support level here, and it doesn't seem like much, but you're getting a little bit of buying. This was what? The low was what? 385. You could have took a risk off this, and this thing went to 420. Now, it doesn't seem like much, but this is how you dip buy. You see the clear support. You see the next 1 minute candle goes up, comes down. If you see the low here, and you see it's not breaking below it, you could take an entry. Now, this is a little, you know, it's not as safe as some of the other plays, but right into this candle, you could have took it, and it got up to a high 422. And right in here is where I would have went short, because I'm saying, hey, it's not getting above the high, and you know, this thing gaps down. Look what happens. It consolidate, comes down sideways. So Here's a support level, right? But it breaks below it. And right here, look what happens. It gaps up, double bottoms, finds a support here. That's a trade where I would go long in. Right here, I would take a trade right into this candle. 356 doesn't seem like much, but this thing got to a high of 375. All right, so you got about 20 cents there. Actually went higher than that. It got up to 375. I'm sorry about that. Yeah, so this is not a stock where you got the big gap up. It came down even further, and then this is what happens. So short sellers keep shorting these pops, but at some point it found support right here at 337, and look, this is where you could have dip bought it. Now the problem is you're gonna say, oh, my hindsight, this seems simple. It's not simple. You gotta have the patience to track the stock as it's going down. If you know that short sellers are driving it here, at some point you're gonna see a reversal where it's gonna have some serious movement. So in here it was where you got the trend reversal, completely found its support here, and that could have been a previous support level, because what you should be doing is, let me remove over this. If you're doing this properly, what you do is you start putting your trend line. So right here, this was the high day. This seemed to be a support level right here. This is the high at this point, and then this is the high. And then what you're doing is you're looking to see what are you playing off of. Now look what happens. Now this is the way you want to do it. You want to put your support and resistance lines pre-market as you're watching the stock. And look what happened. Stock gaps up, finds this high. So you put your trend line here. Look at this. It bounced off right here, which was at this point, this was resistance. It became support here, and that's why people bought the bounce. Guys, I'm telling you, this is how you do it. This is what you do. This is specifically for traders who don't want to short, who just want to buy off clear support levels. This is how you trade. And this is probably, I don't know if Mark is a low float. Well, it's above. It's like 20 million. People would say is like the max criteria for low float, and it should be 20 million or less. But 22 million is still not a ton of shares, and that's why you're getting all that fast range. So that's basically it, man. That's the pattern, guys. Remember. So if you put it on, look at the charts. Go to FinViz. Study the biggest percentage gators, the biggest percentage losers. Go look at the news to see what caused them to go up, go down. Look at the clear support and resistance levels and see if any of this stuff makes sense. Let me know if you have any questions. I know this was a long video, but that's what I've been doing, guys. I just been making trades clearly off support levels. Letting stocks run. A lot of times I don't have the ability to short these stocks like Mark, or they're low flow, and Thinkorswim won't have the shares available a lot of times. So I just watch them for bounces and just buy dips, in and out, boom, 1,000, 2,000 shares, 20 cents, 30 cents, and I'm banking, $600, $800, $1,200, yesterday was a nice day for me. I actually shorted AKS too yesterday. I really quickly, just to show you. Very simple. I saw the stock gapping with X, because X was on my radar, so I said, let me look at AKS. They're both steel companies, and I actually shorted it right here. I saw that it gapped down and it gapped up, and I knew that it was at 587 originally. When I saw the double top, I just took a short, risking 587, and it was a quick short. I actually covered too quick. I should have let it, continue to sell off. But I actually covered at like 580. So I made, and I was only 1,000 shares, so I only made $60. But I should have went heavy, but I was focused on HMNY, and I can't be in too many trades at once. But look, this is another example where, look, everybody like me, people like me saw it, shorted the pop, the stock went all the way down, and what happens? At some point, you're gonna expect either, it's above VWAP, so it's still bullish. And it finds its support level clearly here, and you see gaps up, finds the high and low here. So right here, I would have went long here, seeing that the volume was coming in, and these are all the shorts covering. And look, it went all the way up. After hours, it's up at 588. All right, that's it, guys. That's it. The best place to do this again is on low float runners, because the range, the volatility is so good, and the movements up, they happen so fast, and you can make a lot of money really quick. All right, so hope that makes sense. Hope you enjoy your weekend. If you have an aha moment and this makes sense to you, just leave a comment saying aha or something silly. I don't know. If you thought it sucked, let me know, and I'll work on something better. I just kind of just winged it today. All right, so I hope you have a great weekend, and subscribe, like, and follow.